Everyone, and welcome to this webinar organized by ecoDa and Forvis Mazars. Back in early 2022, the European Commission launched a broad consultation on the EU corporate reporting framework. The Commission has now decided to narrow its focus and will be launching a new consultation in April dedicated to audit supervision. This provides a timely opportunity to explore audit supervision from a board perspective. We have today with us an excellent panel of speakers with David Herbinet, who is Global Head of Audit at Forvis Mazars, Fabrice Demarigny, who is the Chair of the Board of European Capital Markets Institute. He is also currently the Global Head of Financial Markets at Forvis Mazars. We have also Anne Hélène Monsellato, who is Non-Executive Independent Director, highly engaged in corporate matters. We want to make this webinar as interactive as possible. And we would like to get your question using the Q&A function, but we would also like to get insights from your experience. As a board member, a member of an audit committee, or in another capacity, what changes would you welcome in the EU audit supervision framework? So please feel free to interact with us. And without further ado, I will give the floor to Fabrice, who will set the scene for us. Thank you.
Well, thank you very much, Beatrice, and good morning, everyone. Maybe just to remind some aspects of the context in which this new file in the EU has been launched. This is a result of a speech of Commissioner Albuquerque in September last year, where she explicitly said that she is not in favor of a wide EU audit reform, nor the introduction of a new EU rule on internal controls, but really a focus on audit supervision. And the reasons she put forward is that she noticed differences in supervisory and enforcement powers in member states, which create cost and burden of compliance, risks of duplications of reporting, and real differences of powers and resources of the national authorities that create an unharmonized landscape. She also noticed that the Committee of European Audit Oversight Boards, which regroups the national supervisors, has very limited powers, no budget, no resources, and challenges with new technologies and change of size of the networks since 2014 that requires a more consistent approach. Of course, the key objective is and will remain always audit quality, but she's looking for something with more supervisory consistency across the union, maybe reducing national discretions in terms of rules, but also in terms of practices of supervision. The question will be then more convergence, but on what and how to achieve that. Maybe a few elements of context that are behind audit supervision, but that will influence the process. The EU is going through a huge exercise of simplification. We have seen it with the omnibus on sustainability, but there are many other omnibuses that are pro-business oriented. So the mindset of policymakers is like this. And this comes also with a significant market integration and supervision package on capital market issues, which aims at more capital market integration and in particular centralization of powers given to ESMA. So that will influence the discussion. In terms of timing, the consultation on what should be the priorities on audit supervision improvement is expected soon, maybe April, at least before the summer. And the key questions will be really enhancing powers and resources of national supervisors, making more transparent supervisory actions, and creating more supervisory conversions, maybe through some rulemaking at a technical level. Results of the consultation will be digested and expected before the summer, and the Commission might or might not take a legislative initiative by year end or beginning of next year. So this is really to set the scene, but now I really the floor to the other panelists to explain more in detail how this directly concerns audit committee members and board members.
Thank you, Fabrice. I think it's my turn now. So thank you for the brief oversight. With respect to audit committees, currently, we know that we have 5 major connection points between audit committees and audit regulators. So currently, we have a lot of possible interactions. So we have interactions through the inspection reports where we can be interviewed when our company is selected, the audit file of our company is selected, and so this would be upon request of the audit regulator, and this can be also during the tender offer process. It's useful to have the inspection reports for us when we are overseeing the tender offer process. Second, we can be interviewed by the audit regulator in the context of the questionnaire sent by the audit regulator in the context of the CEAOB report to the Commission every 3 years. That's on a sample basis. There is a subsample for interviews of audit committee chairs which are selected. So that can be another point of interaction. We also have direct engagement during conferences held by audit regulators, to which I know for sure that a certain number of audit committee members are attending those conferences. They are duly appreciated. We also have 2 other topics where, for example, when we have to ask for a derogation for the 70% ratio, we have to prepare a report to be sent to the audit regulator. And another less fortunate occasion, I would say, which is during enforcement and possibly sanctions. So those are really the 5 connection points that we see directly and indirectly at us audit committee members where we could have interactions. So the key point for us is really how audit regulators can help the audit committees to understand the performance in terms of audit quality, the performance of the audit firm. I mean here the behind the scene, is the audit approach well calibrated to the risks? What is the degree of complexity of the audit and why? Is the audit firm doing enough work in key areas, and in particular, are they effectively implementing what they tell us they will do? Is the number of hours that they declare to us really is the one that they have through their own audit capture system? And which we use really to understand where the effort of the audit is actually spent. And also the quality of the control system, is it operating as intended? Because we are relying on that a lot. So I prepared a quick wish list on my side based on my own views and obviously discussions with my fellow audit committee members. So here is 6 points as suggestions. First, we feel that the inspection report should be written in plain language, that the average audit committee member with average understanding of the audit approach can understand. Usually, when we read those inspection reports, it's fairly boilerplate language or maybe overly technical, and we fail to understand how it really relates to auditing standards and what's to be done. So we'd like to have clearer explanations here. Also, we need a clear understanding on whether the audit regulator is of the opinion that the audit the quality control system is effective at the audit firm, to have a really clear opinion on that. Second, regarding the obligation to communicate the inspection report, currently the obligation is on the audit committee to request communication of the inspection report. We'd like to see that reversed in the sense that the auditor should have the obligation to tell the audit committee that they have been selected for inspection, so that we can in a more timely manner discuss with them the audit approach, so do the other side around. Also, absent publication of the inspection report like we have in Sweden, for example, it's not in all countries. We believe that communication should be made mandatory during a tender offer process with names withdrawn, for example. Personally, I believe that making the inspection reports public, fully public, can enhance academic research and understanding of audit quality, but it also has a very good didactic impact on audit committee members, as they can better understand the level of thoroughness that is required from the auditors. And well, we all know that inspections at our companies are once in a while, so understanding that level of thoroughness for other audit engagement, I think it's a fairly good point. Also, we have in France a sanction regime which has been put with monetary amounts, and we can be forbidden to apply as board members. And we'd like to see that harmonized across the EU. Because in France, we feel that this has driven a higher level of awareness of the reform. It's not homogeneous in all EU countries, so there should be something to be done here. And to be clear, that sanction regime put audit committees in France in quite a lot of pressure, especially with respect to non-audit services, where we'd like, Fabrice alluded to that, we'd like to see a reduction of the options of non-audit services, so that it's homogeneous across the EU, and there also should be no exemption for non-EU countries. We failed to see the point of having exemptions here for non-EU countries. It goes with unnecessary complexity of the non-audit services regime. It's far too complex. So in a sense, the general recommendation we have in France for that is to reduce non-audit services to de minimis and only on a by exception basis. So we need to be clear and homogeneous on that. And finally, the 70% ratio should be drastically simplified. Currently, it's very difficult to compute. It's a case of sanction in France currently. So there should be a basic principle of non-audit services not exceeding a set percentage of total audit fees for the group, and not just an unbearable equation, which I can assure you most of the CFOs and audit committee chairs really have difficulties grasping the rationale behind that equation, compared to the principle which should be very, very basic by itself. So this is a quick wish list on our side in terms of what could be done, looking for improvement, again, not radical overhaul, of how supervisory authorities and audit committees could interact.
Very good. Thank you very much, Anne Hélène. Delighted to join you on this webinar. I can see before I properly start, I can see that Beatrice has just added a request on the chat. I will just repeat that because you may not all be looking at the chat, but we are really looking to hear you, to hear your questions, to hear your comments on this important topic. Immediately after me, we will pause for a few minutes to take your first lot of questions, specifically, ideally, on the topics that we've just covered up until now. And we will be looking to have more of your thoughts and comments again towards the end of the webinar. So that was for the admin part. Let me drill a little bit more into some of the specifics and echoing a number of the points that Anne Hélène has mentioned. The key objective of this discussion around supervision is to improve audit quality and to improve the understanding of audit quality for market participants. By extension, there is also an opportunity to consider how supervision and how that improvement in audit quality can impact positively on the cost of delivery of audits, which is also an important topic for the market and often for audit committees that are looking at receiving both audit quality but at the right price. So I think the two topics need to be looked at together. And there are probably two key points that I wanted to major on for now. If we look at efficiency, the efficiency of the delivery of audit, at the moment, we have a number of national interpretations of what should be an international set of auditing standards. Through supervision, through reviews of the work performed by auditors, national regulators come to different interpretations of what an audit should look like. And that is causing quite significant inefficiency in the process when firms operating in multiple jurisdictions have to adapt to multiple interpretations of the same text. And that creates compliance overhang, that creates additional compliance costs for groups, and that is something that can definitely be streamlined. It's also a challenge for firms in terms of and that is currently a very important topic, the deployment of technology, deployment of artificial intelligence, that if you have multiple interpretations of the same standards, it makes the deployment of technology much harder. So I think a clear and obvious opportunity here to improve quality while focusing also on the cost of delivery. So my first point was reducing national divergence on the interpretation of a text that is an international standard. My second point is in relation to the way that regulation actually takes place. And if you allow me, I would like to just take you through a little bit more detail in terms of how regulators actually do their job with audit firms, just to try and help participants on this webinar understand the sort of nitty-gritty of this, because I think that's really what we're touching and how we can improve that to deliver better quality and better transparency, which is a key point Anne Hélène mentioned earlier, and I will come back to that. So the way that firms are currently being inspected varies dramatically across Europe. And I'll take you through a number of ways that that difference in regulation takes place. First of all, first question is who is being reviewed by regulators in countries? And that is differing from one country to another in terms of which firms are in the scope of that regulation. What is also different is how often these reviews take place. Again, from one country to another, this can vary from every year to every 6 years. Even within the same country, different firms can be reviewed at different periodicity. So there is a complete lack of consistency around this process, which is creating confusion. If we look at what is being reviewed, again, regulators across Europe may have different approaches to how firms are reviewed. Some will focus more on a selection, a random or otherwise selection of engagements. Other regulators will focus more on the system of quality management, so more on the systems and control and processes. Some, and that's a majority, will have a mixed approach. But again, there is a lot of inconsistency there, which is problematic. Next is how this work is being reviewed, how much regulators focus on substance over form, and compliance versus quality. Sometimes they are not exactly the same. Also, we can talk about different regulators having inspectors with different background and experience. So we have a real patchwork there of who is delivering this supervision. We have inconsistencies and differences across Europe on how conclusions are reached, how breaches are graduated. That is different from one country to another. How firms and regulators are able to interact with each other. Sometimes it's just an inspection with no right of response from the audit firms. How firms can challenge and appeal the conclusions of the regulators. Again, all of that varies quite dramatically across Europe. And last but not least, and that's the point about transparency that Anne Hélène mentioned earlier, we have huge differences from one country to another in terms of how sanctions are communicated, how sanctions are interpreted, how penalties are fixed, what they mean, how reports are published or not to audit committees or to the wider market. So a huge patchwork across Europe, which makes interpretation of the results very, very hard, of course, for audit committees, but dare I say also very hard for firms, for audit firms to interpret. Huge benefit from greater standardization, greater homogeneity across Europe. That's probably all I will say for now, but really keen to pause and have your questions on what Fabrice and Hélène or I have just said. So the floor is yours. We don't have very much in the chat as yet, but hopefully a pause will enable you to type. Not getting much there, so maybe we will keep going. And we will come back to Q&A at the end. But I mean, Beatrice, correct me if I'm wrong, but I'm not seeing any question as yet in the chat.
Yes, you're right. That's the case. So feel free to interact.
Okay, so we will continue then. So maybe I will continue and keep the floor while I have it before we move to the other panelists. So what I've just done is explain where there could be real benefit in greater consistency in approach, benefits for the firms, but also benefits for audit committees in terms of how they receive the results of inspections. I think another benefit, trying to expand the topic, other benefits for audit committees could include a number of other factors. First of all, it is clear that supervisors in the various member states do not have the same means, the same setup, etc. And I think that's particularly an issue in smaller countries. And one of the topics on the table here with this review of European audit supervision is the ability for national supervisory authorities to combine forces, to share resources, to share expertise. Audits are becoming more and more technical and sometimes very, very, very difficult topics. And, again, sharing and pooling of resources across the EU on these very difficult topics would deliver, would deliver value in terms of better assessment of the work that has been done.
David, there is a question now. Do the panel have any views on how to define audit quality?
I think that's a great question for an audit committee person.
Thank you, David. I think this is really a key topic. For example, in the US, there was a project to very much with respect to this topic, how do we define audit quality, and the whole purpose of the reform in the US with Sarbanes-Oxley and in the EU in 2014 was really to enhance audit quality, and we see that it's an endless pursuit of how we can spot audit quality. So from my view as a chair of audit committees, I would say it's a combination of three topics: having the right audit approach being put in place, which means the correct analysis of the risk at the company and of the complexity of the audit, which this is to be understood as a dialogue between the audit committee and the auditors, with the auditors being ultimately responsible for the quality of the audit approach. Then you have the right execution by the auditors. Obviously, project management is key here, so that it is, as we always hear and say, a no surprise audit, which means you can have complex issues, but those are tackled well in advance. So project management. And the third component, I would say, which is very important, is how professional skepticism from the part of auditors is exercised and demonstrated to the audit committee. We need to understand that the auditors are really probing and challenging management in terms of accounting principles, interpretations, and judgment. So in a sense, audit quality, it will be a mix, I would say, of all those things: the attention to the audit approach, the correct execution, which we can feel if we have a well-paced audit, no surprise, complex topics well anticipated, fluid discussion, seamless discussion, and effortless discussion between the CFO and his team and the auditors, and professional skepticism, and obviously the correct reporting to the audit committee in plain language, something that the audit committee can understand, the key messages well delivered. So those would be, in a nutshell, the 3-4 components where we can, as audit committee, assess the quality of the audit, plus the behind the scene I was mentioning earlier, which is the role of the audit regulator. He's the one having a detailed look at the audit file. So he's the one in the best position to assess whether the interaction that we have with the auditors on all those components, formal or informal, like professional skepticism, demonstration of professional skepticism, he's the one who will have the hard look at whether this is correctly translated in the audit file and really supported by the audit procedures which have been put in place. So really, audit quality, you take right approach, right execution, professional skepticism, and the quality of the inspection and how this is reflected in the inspection report. I hope I have answered the question, and maybe, David, if you want to add anything to this, it will be much appreciated to have your views.
Thanks, Anne Hélène, and I can only agree with that. Just to mention two points, maybe to complement. One is that there is often a great deal of confusion between audit quality and compliance with auditing standards. The two are connected, but they're not equal. And sometimes there is perhaps a little bit too much focus on compliance with auditing standards and not enough on the delivery of audit quality. The second point is that the European Commission and especially the CEOB, and I think we will see that through this review of supervision, there is a great deal of focus on the concept of audit quality indicators. And a number of European regulators and global regulators are currently looking at audit quality indicators. And that's important. I think it's important to have audit committee members contributing to the discussion on audit quality indicators, so that it's not a purely technical topic, but it's a topic that actually delivers value for audit committees. I think there is another question.
We have another question. How should audit committees prepare for potentially more frequent and more structured engagement with audit regulators?
I'll pick that one, which is a very interesting question. As you might know, audit regulators, so I mentioned as part of those points of connection between audit committees and audit regulators, the questionnaire that audit regulators are having with the sample of audit committees and possible interviews with audit committee chair. And usually on their website, at least in France, that questionnaire is released, so you can, it's publicly available, and any audit committee can go and have a look at the full questionnaire. And you can, as part of, I would say, self-assessment of the performance of the audit committee, go through that questionnaire as part of an audit committee session and review how you would respond if you were in the shoes of an audit committee which has been selected for the answer. And then you can assess your level of readiness with respect to those questions, which totally reflect, I would say, the focus of the audit regulator. And it's a very good way for audit committees to be sure that they are prepared for any engagement with audit regulators. So that, I would say, is part of standard preparation for regular interaction. Nothing problematic, I would say. In the case of enforcement and having more different type of discussion with the audit regulators, obviously, if you are, as an audit committee, well aware of your obligations as part of the audit reform, so the 6 missions that have been put on the shoulders of audit committees, you should be in the safe side of things. If you're not, then you need urgently to have some training around the obligations of audit committees. But definitely having a look at that questionnaire will enhance the level of awareness in terms of focus from the regulator on what they will be looking at in terms of how audit committees should comply with what is requested from them. But David or Fabrice, feel free to add anything here.
No, nothing to add from me.
Maybe there is a follow-up question. Is audit quality also the main decision factor used by audit committees in appointing auditors? Should there be more guidance by supervision authorities how auditors should be selected by audit committees?
I think it's a great transition, Beatrice, because that was going to be my first set of comments for the post Q&A session. So maybe I'll start, and Hélène, you will no doubt have an opportunity to comment on this later on. So I suggest I take this when we keep going with the order of the webinar, and we will keep your questions coming, because we'll have more time for Q&A right at the end. So I was indeed going to try and broaden the discussion on supervision, and my first point was going to be about something that both Fabrice and Anne Hélène have mentioned, which is the opportunity to bring more consistency in the implementation of the audit regulation from 2014. And the first area where there could be more consistency is in relation to audit tendering. You may remember that the regulation covered or brought a number of very significant enhancements to the way that audit tenders should take place. And as Anne Hélène mentioned, there have been a number of national options that have been enabled by the regulation. And we can see that the implementation of this regulation is a real patchwork across Europe, with lots of member state options being exercised, which bring tendering, which bring a lot of inconsistency in tendering. So that's definitely something that could be looked at through this review of supervision. The periodicity of audit tenders varies. There are differences between audit tenders and mandatory firm rotation across Europe, etc., which for a large group, especially we have the experience in the financial services sector, because in financial services, most of the operations will be PIE, so subjected to the regulation in the various countries. That can be really, really tricky to operate for audit committees in particular. The audit regulation also covered the communication between auditors and audit committees, and between audit committees and the shareholders. And again, there will have been differences in implementation of this. And the regulation also covered the transparency reports of audit firms, and again, differences in implementation there. So huge benefit for audit committees and for the readers of audit reports if we could have a bit more consistency around these topics of application of the audit regulation to PIs. My next point is that I think this review of supervision in Europe can be a really great opportunity to enhance the level playing field across member states. As I mentioned earlier, in terms of supervision, all firms are not being treated the same, which brings some challenges to competition and choice in Europe. Notably in member states, so national competition, I think, differs because of differences in supervision. So more uniform supervision in Europe, I think, would create a better level playing field if done in the right way. And this supervision could also be broadened from purely statutory audits to other types of assurance. And notably at the moment, we are seeing the first rounds of sustainability assurance reports. And again, we are seeing huge inconsistencies in Europe in terms of how this works. And these reports are being monitored and supervised. And my last point before I hand over back to you, Anne Hélène, is to say that importantly, the regulation, the 2014 audit regulation, also covered expectations of audit committees in the context of the important role that audit committees have to deliver audit quality. Auditors have a massive role to play, and probably the biggest role to play, but we are not alone, and audit committees also have their role to play. And currently there is no consistent approach at EU level on the oversight of the audit committees with regard to their responsibility in the context of this audit regulation. So again, that's something that could be brought into the scope of a review of supervision in Europe. So on this note, I thought it would sort of give you a hook to respond to, Anne Hélène. So happy to hand over back to you.
Yes, thank you, David. I think you make a very good point regarding the quality of the inspection reports and in terms of interpretation of the ISAS. Definitely, this needs to be harmonized, especially the grading of the severity of the points, so that we're sure that we have homogeneity here, so quality of how the inspection are conducted and homogeneity here. Also, there is another topic you did not bring, which is the possibility for auditors' resignation to be possibilities to be harmonized across the EU. And in case of a change of an audit firm at the parent company, there should be the possibility for that audit firm to request that the affiliates auditors resign. This is not the case everywhere in the EU, and we think it's fairly important because first, it makes your life much simpler in terms of cost and supervision. We all know that it's complex to review other auditors' work papers. There is always a confirmation bias, and the audit firm are investing a lot to ensure consistency of the application of their own methodology across their network. So we should be able to leverage that. It's a very important point for us. And second, we think this having a patchwork of auditors across the group is a clear deterrent to the use of technology regarding the use of technology in the performance of an audit. And if we want to see more use of technology, such as you mentioned artificial intelligence, but also data analytics, we definitely need to have the same firm all across the pattern. A key point regarding this use of technology is that it's expensive to implement. So we need to have people in the audit firm already trained. That will not happen with a different audit firm. And there is also, and that's a consideration for the audit regulators, there is probably a need to consider adjustment to the auditing standards so that it's easier for the auditors to use technology as part of the audit. Currently, when we are pushing that at the level of audit committees, we have some form of pushback saying, yes, but we will have to duplicate audit procedures because currently it's not something which is well defined as part of the auditing standards. Then there is another point, which is you jumped into that in terms of the obligation for audit committees. We have to assess the quality of internal control with respect to financial statements. And currently, I do understand the Fabrice comment initially regarding the point that there was no plans to add some level of assessment of internal control, but still we feel that there is a vast disparity in terms of how this obligation assess the efficiency of internal control system at companies. It's not clear what are, that there are no guidelines in terms what should be done by audit committees, what should be done by companies. 10 years ago, 12 years ago, we had Sarbanes-Oxley in the picture. Now we all know COSO is widespread within subset of companies, I would say, but still we do not have guidelines at the EU level of what is expected from companies and to help audit committees implement that second mission regarding assessment of the efficiency of quality of internal control over financial reporting. So that's a key point, those guidelines regarding internal control. And finally, I would comment on that question regarding is audit quality the main criteria for tender offer? I do feel that's the main criteria, definitely. So audit quality, which will also encompass competencies, being knowledgeable in the sector of the company, but also the point I was making earlier regarding the degree of complexity of the audit of your company. You can have medium-sized company, but with very complex points, cryptocurrencies, carbon credits, etc., which require certain specific competencies within the audit firms. So having a sound understanding of the degree of complexity of the audit of your company is key for the audit committee. And definitely this is something which will help them understand, do they need a big four, or will they be very happy with a firm like Mazars, BDO, Grant Thornton, a second tier audit firm? And if you have a reasonable degree of complexity, you can have a very robust and qualitative audit performed by those firms. So big four is not always the best options, and that depends on the degree of complexity of the audit. But certainly the audit quality is the main criteria for the tender offer in a nutshell as a response to that question.
Okay, thank you, Marie-Hélène. Before we open for a second set of questions, I would like maybe to recap a little bit the discussion on these various issues, very technical, but in putting it into the political discussion, how it will happen, because you will hear about this, and because of the way the EU functions, you will hear this in different manners. So I think that there is a clear understanding that further convergence, or at least harmonization, is needed, which will mean to give to the CAOB some role to set rules in more detail than the ones in the audit or the directive. Regulation or the directive. But so far, the CAOB has no official advisory role to advise the Commission on technical standards, what we call level 2 measures that bring more detail to articles of the level 1 legislation. So I think there is a clear understanding that reducing member states' options that were given in the law will help, and reducing the room of interpretation of some of these rules will facilitate life and create more certainty for audit committees. So what are the areas where further harmonization would be welcome? I think you mentioned, Marie-Hélène, fees cap, definitely. I think you can even go a little bit further on fees, transparency, which already exists, but maybe how this is articulated with sustainability assurance, transparency would be interesting. Non-audit services, definitely yes. White list, black list, there is whatever, but at least please have an harmonized set of rules across the union. You could add the way joint audits are conducted in the union once the company decides to do so, to have the same rules across the union. And there is a set of convergence tools, which is not binding, like the level 2 measures, where the national authorities could have conduct efforts to have convergent ways of doing things through peer reviews of their methodologies, or even giving the CAOB an opinion right to issue a statement vis-à-vis national supervisors that are applying things there in a divergent manner. This is about rulemaking and convergence. The same kind of convergence can be achieved when we go to real supervision, but here they need to clarify what, as you said, Marie-Hélène, the focus number 1 is audit quality, and therefore an assessment by firms or by networks of the way they implement quality and risk management, ISQM1. But then it comes to final reviews, and then the things are different because then the controls are organized. It's easy when it's a national company that is audited. It's more complex when it's cross-border. And then it involves several national supervisors, and you can organize it differently, country by country, but then you have duplications, or organize a college of national audit supervisors, where the leading one is the auditor of the group, of the country where the group is. So that you will hear about organizing these kind of things. And again, third difficulty is the sanctioning, because that happens country by country. It's member state right for each firm has license, be it a member of a network or not. So that adds to the complexity. The other kind of complexity you will hear about the CAOB is that the CAOB is composed of audit supervisors that are not alike. Some are standalone authorities. Some have even some powers delegated to another national authority. Others are the department of the Ministry of Economy, sometimes the department of the Ministry of Justice. Sometimes this audit supervisory function is embedded into the financial market supervisor. That's the case at least in 4 member states. So that there will be some reluctance to harmonize because of very different backgrounds, and hopefully that will not be an obstacle. And finally, regarding the CAOB, what would be the changes into the CAOB? As I said, they have no resources, they have no budget, and there are several options there. The CAOB it's a more modest EU committee, different from the European supervisory authorities like ESMA, EBA, EIOPA, or even AMLA today. But this effort of converging practices will be very strong. So there are 3 options. The CAOB can stay as a standalone committee, but with his own budget, capacity to advise the Commission on rules and have convergence powers, as I just described. First option. Second option, you could think about giving this role, EU role, fully embedded into ESMA, which definitely will increase the institutional profile, but that runs the risk of seeing the technicalities, the specificities of the profession being less understood and being a little bit lost in a huge authority with different agendas. And the third option is maybe the CAOB has a subcommittee of ESMA where you can win more higher profile, but you don't lose the need for a proximity and understanding of the profession. So these are the kind of things that during the consultation and a legislative process, if there is one, the way the union will be discussing these issues without, of course, forgetting that the key priorities are the ones that Marie-Hélène and David were discussing to make life of audit committees easier and more predictability in the way rulemaking and supervision of audit is done. Carried.
Can we maybe ask Anne Hélène about this question? So there is in Europe a need for simplification. Is there room for simplification that could make the work of the audit committee more effective without adding more rules and contributing to the simplification agenda?
Thank you, Beatrice. I think really currently how the obligations of the audit committee are defined in the 2014 reform are, well, with the exception regarding the point I made regarding internal control, assessing the efficiency of internal control over financial reporting, for which I feel we do need more guidelines in terms of what expected exactly. Should companies adopt an internal control framework, for example? That's a key topic. But apart from that, what we have to do at the level of the audit committee is pretty clear. The point is making sure that, as Fabrice and David pointed out, making sure that the overall system makes it easier for everybody to play the role. So simplify non-audit services, simplify the 70% ratio, ensure that inspection reports, inspection are conducted on a more homogeneous basis in terms of depth, grading and severity, quality of the points reported and spotted by the audit regulators, so that it's all consistent across the EU. I think this is the way to go. So it's simplification of the overall process, no change. But currently, as far as audit committees are concerned in terms of what they should do, it's well written and pretty clear in the regulation, except that regarding internal control, that would probably warrant to be clarified in terms of considering that now we have the COSO plan site. Should all companies adopt an internal control framework? Currently, it's not clear for all companies in the EU. So some of them are adopting it and makes life simpler for the audit committee, in addition to facilitating the quality of the audit. And for certain other companies, they will tell you, well, no, it's not mandatory. We do not have to have that. You're not up to the latest I would say, standard of quality in terms of how you approach internal control. And this sure has an impact on the quality of the independent audit on the other side.
Thank you. Maybe a last question. Can anything be said about quality improvement through joint audits and the regulatory view on that?
Joint audit, it's the basic principle that 4 eyes are better than 2 eyes. And whatever you can say about internal and self-quality of 2 eyes, 4 eyes are always better than 2 eyes. And that's the basic principle. And then in terms of cost, I think you can look at all the studies that the cost of the audit fees in France are on average the same than the rest of Europe. So there is no additional cost. And lastly, where I do agree, I believe that, and that's what I mentioned, that there will be merits in having the way joint audits are conducted, be it on a compulsory manner in some member states or on a voluntary manner, which is increasing across the union the same way, to make sure that you understand the same thing when you read figures that are audited the same manner. So, and lastly, the big merit of joint audit is that it helps immensely the diversification of the market, and therefore more choice for audit committees when selecting their auditor.
Thank you, Fabrice. I'm conscious about the time, so maybe could we have a final say from each of you regarding audit supervision? David?
Very quickly, 2 words. One is the debate on joint audit is not over, and there are plenty of opportunities, Beatrice, to organize other webinars on this fascinating topic. But my biggest comment is to say that it is interesting that the work of supervisors is coming into the spotlight. It's been over the last 20, 30 years very much a bit of a dark arts happening behind the scene. That was, and I think this debate about supervision in Europe is really bringing this to the fore, and I think that's a good thing. So let's keep the discussion going. Let's hear the views of all participants, and no doubt the the supervisors or other people who are on the call will find the discussion really, really interesting and valuable.
Thank you, David. What about you, Anne Hélène?
Well, quick word on that. I think really what's important for audit committees is to make sure that audit regulators are looking at the robustness of the quality control system at the audit firm. We don't have a direct view on that. We just have that indirect exposure to that. So making sure that they have a hard look at whether the quality control systems at the audit firm are working as intended is key.
Thank you. And Fabrice, the final words for you.
Oh, saying that's a huge responsibility, but I think it's fair to echo what has been said. I think we try to build in the EU a saving and investment union, which is to make sure that savings reach the best investment place or where funding is needed. And for that, you need trust in financial information and therefore trust in the audit capacity to bring that efficient transparency of the market. So this is very much welcome.
Thank you. Thank you, everyone. We will be closing the webinar. Be aware that the recording will be accessible on our YouTube channel. I wish you a very good day, and I thank you very deeply and warmly our speakers, David, Anne Hélène, and Fabrice. Thank you very much for your participation.
Thank you.
Thank you.
Thank you,
Bye.
Beatrice.
Bye-bye.
Have a nice day. Thanks to all.